business in that particular country in the future. Next, you have the speculators. They play a major role in predicting trends in attempts to profit. They are sophisticated risk-taking investors with expertise in the markets in which they are trading. Notice I said expertise in the markets that they are trading. Too many people want to come into the Forex market and trade 50 different pairs. Stick to a few, become an expert at those particular markets. These investors are called speculators due to their tendency to attempt to predict price changes in more volatile sections of the market. This is a lot easier to do when you are when you're an expert of just a few markets. These investors are called speculators due to their tendency to attempt to predict price changes in more volatile sections of the markets, believing or speculating that a high profit will occur even if the market indicators may suggest otherwise. If a speculator believes that a particular asset is going to increase in value, they may choose to purchase as much of the asset as possible. This activity drives up the price of the particular asset. The same can be seen in reverse. So what exactly do I mean drive up the prices? Well, if you look right here in this market here, the arrows that are red are showing areas where the market moved up significantly. This is because through supply and demand, as they started to buy more of the assets, those assets started to move up, the value of those assets started to move up. So that is why you see major shifts upwards. And contrarily, the green arrows that are pointing downwards are showing you where they sold off a lot of their assets, and as a result, they lowered the value due to supply and demand. Some of the most famous speculators that you may have heard of is George Soros. He went short on the pound, earning him his first $1 billion in less than 1 month. By the way, when I say went short, I'm saying he sold off his part in the pound. Okay. And then you might know of somebody else named Nick Leeson, who was a trader with the Barings Bank in England. As a result of his incorrect speculations for the yen, he lost over $1 billion, which resulted in the collapse of the company. Speculators work for major banks and special departments and trade money for clients. It is these departments that take your hard-earned money that you take to the bank, put it in the Forex market, and then grow it and turn around, pay you a whopping 1% for the year. Isn't that great? So also you notice that these guys work for the bank. That also means that when the bank is on vacation, they are on vacation. You are missing a huge portion of players that move the market. So again, when they go on vacation, you go on vacation. Finally, another very important market participant are the retail traders or independent investors, which, as I talked about earlier, comprise only 20% of the market's overall movement. Whoop-de-doo. Investing in FX used to be the exclusive privilege of an elite group of hedge funds, investment banks, and multinational corporations. These institutions guarded their turf fiercely. And why not? Between 1990 and 2006, Forex investments returned 9% a year, more than either bonds or equities over the same period. For individual investors, the Forex has largely been off limits. One needed a minimum of $1 million to place a trade, and there were a plethora of complex legal documents to review and sign, as well as an extensive credit check. Now, over the past 10 years, this has all changed. Thanks to the internet, online trading systems which give ordinary investors direct access to the currency markets is now possible for retail investment communities such as us to easily and quickly trade on international Forex markets from any internet-capable computer. That means you can be anywhere in the world. As long as you've got internet, you can trade. So retail traders include people who do not trade for companies, again, like you and I, who also use risk management strategies in hopes of personal gains, and they do not have a major role in deciding the trend. It is very important to know that retail investors like us are at the bottom of the totem pole in this Forex market. Many people come into the Forex market thinking that they can predict the market and what it's going to do. Let me tell you right now, you will not be able to predict this market. Your job is to find the trends that arise and follow them closely. Get ahead of them, get underneath them, but do not try to predict the markets. By now, you should have a good understanding of the following questions.